Anthony Borsellino. Today is the 8th of October. And to add to the volatility today, China is back up and trading today. So I gotta tell you what, years ago when I was in the pit, I was always yelling and screaming. I mean, half on 20, half on 20. I had to get orders. I was filling orders, doing all those things. I would wake up sometimes in the middle of the night and start screaming, half on 20, half on 20. Wake up out of sound sleep because of everything that was going on. Now I wake up in the middle of the night and I see my dome and the charts going up and down, up and down. But you know what? Can't complain about volatility. It gives you opportunity to make money. Got to be nimble. Got to be quick. Got to change our name to Jack. I guess Jack be nimble, right? So anyway, you know, I've been talking about how the market has to get it through this 1980 to 85 area. We, as you can see, we made a couple tops up here now, and you know, you got to think about where we came from last Friday, right? So last Friday we had the unemployment report, and we went down in the mid 1860s, and then you know we rallied all the way back. So I think we're in a consolidation, and you know the problem. It's nice to get these 400 point or 4,000 point ranges. Excuse me, 4,000 point ranges, but they sometimes what they do, they give you a false negative because you're a false positive. You're thinking that every day is going to be a trend day. Remember, we probably only get 4 trend days a month. So, you know, I still think that the market's heading up. I think we're in this consolidation area. I think you got to be a buyer of dips. You know, I mean, the dip yesterday that during bracket D, the news that came out, the failure up there at the top was, you know, sometimes that happens, and you know, you get caught. So you know, the key to trading is remember, thou shalt not shoot their you know, the whole wad, right? You got to be able to survive those downturns. So anyway, let's get to screen sharing. And I did some stuff on gold last night. I did some stuff on oil. Looks like the goes done. The trading manual is done, as you can see. Pat Tabbitt will be here all next week. We will finish up the indicators. Trading manual is part of our program. You can buy it separately, but it'll be part of the program if you're in the funding program. And there's everything you need to know about trading in there. I guess that's a little bit sarcastic, right? But there's a lot of indicators. I'll tell you what, it talks about our indicators, gives you all about how to use them, and gives you some strategies for approaching the market, right? So let's get to screen sharing and get going. I noticed that I keep hitting this thing and it causes a lot of static, but I'll try to stop that. All right, so let's sort of start with everybody's favorite market, the S&Ps, right? All right. So big range in Globex last night. We've got a 1989 quarter high, right? So as long as we're up here, let's talk about all these tops we've had up here. All right, so 89 quarter. Then we had the failure yesterday up here at 88 half. So obviously we know that this top is you know, been hitting resistance and profit taking, and so you know obviously that is our key, right? Couple key points today. I'm looking at as far as up here, we've got to get through 81 half, 84 even, and then once again through 86. All right. When I look at the overnight action, you know, once again, they're going to get some two-sided trade, because when we look at it, the overnight action stayed contained within the range, right? So this is an unfinished top, all right? An unfinished top right here on the day yesterday, with the high being at 1990. And then we've got an unfinished bottom down here at 1967 half. So that's telling me we're still going to get a lot of volatility, two-sided trade today, okay? So we've got to be prepared for the volatility, okay? Right now, it looks like we made the bottom. We moved back up. We tried to get out of it up here, and we failed. Okay, and it looks like sort of a almost like a double distribution so far. A lot of volume put in this area, which we're going to need, because if you look back this way, right? Look over here, BC over here. Okay, let me move the chart down a little. All right, it's just putting volume in that area. That was the high that we came out and took over. All right, so I'm looking at 1977 and a quarter is another key on the bottom, and 1976 half. So, and which we're testing right now, right? The 77 area. Okay, so I think that you're going to get a two-sided trade, and we've got unfinished top and bottom from yesterday's range. Unfinished from top and bottom yesterday's range. Okay. Let's take a look at how it looks here. We got a value area high of 1987 half. We've got a point of control, most volume traded at 1987 and a quarter. Got a value area low at 1973 half. Bull bear zone of 1971. I've got a gray on my CCI, so that means I got a little. It's been up and down, so it's kind of neutral right now. So what I would do is let's wait for bracket B and see what kind of volatility we get in those brackets to try to formulate a trading plan for the day. All right. So currently the 5-minute pivot is right here in a buy at 1974 half, right above the value area low. I've got the Russell in a buy at 1144.10. I've got the NASDAQ in a buy at 4294.61. And I've got the Dow in a buy, and you've got the Dow at 16,715. Okay. So there's your pivots in a buy. One of the things I gotta, that you'll see, and you can't give up on these, because when we get them, they're right. And I just think that the market has been readjusting from the movement that we made from way down there in the 1860s from last Friday. It has to build some more volume in this area before we move higher. Okay. And sometimes you get this volatility in the 5-minute pivot, will give you, they end up becoming targets. Once they take them out, it becomes a target on the upside again. So I think that what we're seeing is the fact that the market, if I went and hopefully this works, if I can make this, let's make it a 60-minute chart. Let's see if it will, give me the look I want to get. So if I take a look at this from, it's not the bottom. Pull it down.
No, the bottom.
Can I do this?
Yeah, I'm pulling. See from 09 at the bottom, way bottom.
I'll just show it. That's all right. I just wanted to show that the consolidation, get a bigger time frame. We're getting a consolidation, and the market moving up and down in the volatility. So I think that's where, I think that's what's going on with the market as far as volatility is concerned. Let's look at the 15-minute pivot. All right. So here's an example. We got the 15-minute pivot right here at 1983.5 above, right? And we got the 5-minute pivot below us. So remember, I need these pivots to, sort of be in the same mode. Here we got the 30-minute pivot, all right, below, right here at 69.25. So it's just telling me we're going to get a two-sided trade, and they all have to come and eventually get in the same. They all have to be on the same side before we can get any really strong move to the upside or the downside, right? So, they're great tools, but after using them for years, and that's what we explain in the manual, the different nuances of how the pivots work and so on. For you new viewers, remember that these are proprietary pivots. They're not to be confused with floor pivots, which is the high, low close divided by 3, right? High, low divided by 3. Okay. So now let's go take a look at gold. Gold broke on through our bull bear zone about a half hour ago. So we've got a value area low at 1141.30. It's currently trading below value. Bull bear zone of 1142.40. So it had to get back up in here. Point of control of 1145.60, and value area high up here at 1148. Gold, when I look at the profile, also had the same sort of look. It was unfinished at both ends, and the top from last night is unfinished. So I think if we get out of the top of value, you're going to see gold go back up to test the highs of yesterday, but we're going to have to get back inside value. Okay. That's what I got going for gold. Oil. All right, so oil is, I looked at the chart last night in oil, and I'll tell you what, when you look at it, I'm going to try to pull it up without causing a lot of distractions. But I did like a 2-year, 3-year chart on oil, day chart. Oil looks like it wants to go back up to crude and test that the 55 area. So it's sitting here right now, and I've been negative as can be on oil. It's right now it's just it's kind of sitting in a no man's land between 40 and $48. So I think barring any, just from a technical point of view, I think it looks like oil wants to go back up and test $55. But I'm going to try to bring up those charts that I did and show them to you. 49.05 is the top of value. 48.64. We've got the bull bear zone right here at 48.02, and the bottom of value at 48.01. 48.01. Okay. So that's what we got going on with oil. Let me see if I can pull up these, if they're labeled properly. I don't have to waste everybody's time here. All right, hold on a second. All right, here's a CL chart that I did. And I did this over, I think this is a 3-year. Yeah, 3-year chart. And I put in a high and a low. The high was up there at $112. And then I kind of looked and said, okay, let me do some Fibonacci retracements on it. All right. So it looks like unless gold goes under 41.30 on a daily basis, we're kind of in a bullish mode, and getting, from the high of 112 down to the low that we put in, it looks like it wants to fill this gap right here at 56.5 to 55. All right. So there's a gap up here, and that would be like a 23.6% retracement off the bottom. Okay. Off the bottom. So, I mean, based on where we came from, and that's taking, the high of 112 up there. So, right now I'm going to stay bullish on oil unless we can get under 41.31. Okay. that up. And then I did the same thing for gold. But gold was a little bit of a different animal. I had to kind of I wanted to make sure that whatever I did came from a significant low. And so what I did was go back over a 10-year period. Um, this is our ES that we've been talking about. We keep talking about this, this area right here, 1890. This is 1882. But here's all the tops now we put up here between 1880 and 1890. So you see what we have to do. All right, we got to get above there to stay. Let me getting close. That's not it. That's not it. Sorry. There we go. All right, so here's a gold chart. And what I did is I went over a 10-year period because I wanted to take gold from 670 up to the high of 1923 and then kind of see where we're sitting right here, right? And when I take a look at the gold chart, this is over a 10-year chart, and then we could see how significant it is for the year so far, right? So $1,300 would be 50% of that move. That 10-year, that 678 up to the high. All right. And right now we're sitting at like I think we have to stay bullish back on gold unless we get under 1090. So you can see we got our pivots here. So, I think that the gold is, looking to make a move back up, and you can remember we've been trading in that range, for the year. If you go back, here's January, right? Here's the high in January up here, right? Which was that 50% from 6080 at the high was 1300. So I think, gold put this low in down here at 1070, and now it's sort of at, in a bullish mode and maybe looking to go back up towards right here, this 1225, 1230 area. Okay. Of course, like I said, 1153 right here is the key because this is that's a 38.2% retracement off the low. All right. So, I had some time last night and really took a look at gold and wanted to understand, and oil where we're at. Bonds, I'm not going to touch on. You guys know that, the bonds are, very hard market to trade when you have when you have the Fed manipulating the bond rates. So, all right. So just to recap, I think the market has to get above. I think you're going to get a two-sided trade, 81.5, then 84, and then we have all this resistance. Look at these tops up here at 89, right? So, and then on the downside, and like I said, the overnight market was contained in yesterday's range, and yesterday's range has an unfinished top and an unfinished bottom. So, good luck with that, right? So, all right, everybody. Any questions, Anthony?
Nothing so far.
All right. So let's stay with us on Twitter, and we're getting closer to getting our programs rolled out, and this is you gotta love the times and the volatility. When I first started trading, the markets are actually so much more dynamic. And the thing is that there's a lot more news now, what do you call it? The democratization of information. I mean, you see, I've got the news channels on behind us. Before we used to have a time lag. The markets trade 24 hours a day now. You got to be prepared to be able to make a move and be nimble with the click of a mouse, right? All right, everybody, have a good day trading, and you know, let's remember the key is to put money in your account every day. All right. Talk to you later and good luck.